But we think that what's happening here is the collapse in the cost of innovation. DeepSeek is adding to it. It has been happening, though. AI training costs have been dropping, led by NVIDIA, 75% per year. And AI inference costs have been dropping 85 to 90% per year. DeepSeek is just putting those very rapid declines into a bit of overdrive here. And of course, you have the executive branch also supporting it mightily, proposing that we include Bitcoin in Treasury reserves. So you've got, I think we're going to have support of all three branches of government are going to be supportive, which is a big change.
A financial shockwave just hit global markets. DeepSeek, China's latest AI breakthrough, emerged seemingly out of nowhere, built in just 2 months for under $6 million. And it outperformed billion-dollar AI giants overnight. The implications were staggering. NVIDIA, the leader in AI computing, saw its stock plummet 17%, while the broader Magnificent Seven tech giants faced major losses. Crypto wasn't spared either. Bitcoin and Ethereum nosedived up to 7%, caught in the chaos of investor panic. It felt like the endgame for risk assets. But then, Bitcoin did what it does best. It survived. Cathie Wood, CEO of ARK Invest, sees this as a defining moment for innovation. AI is accelerating at an unprecedented pace, with training costs dropping 75% per year and inference costs falling by 90%. DeepSeek is just the beginning. But while AI reconfigures industries, Bitcoin is cementing itself as a core financial asset. Bipartisan support for Bitcoin is growing. Institutional investors are reinforcing its position. What was once seen as a speculative asset is now being considered a long-term store of value. Meanwhile, Tom Lee isn't worried about AI-driven stock volatility. He argues that NVIDIA's 30x PE ratio is justified given its leadership in an industry on the verge of explosive growth. AI and blockchain, he believes, are the twin engines that will drive the next economic cycle.
If NVIDIA was at 100 PE, I'd probably say that there's too much good news priced in, but the PE is around 30 times. I'm not sure that that's very demanding for investors, and if you look a couple years out, it's in the 20s. I don't think NVIDIA is priced for perfection.
Is the market itself?
I don't think so. I mean, the 10-year now is backing off to 4.5, so you're still paying over 20 times for a 10-year bond. The median PE in the S&P is around 18 times. I've been researching companies since the early 90s, so over 34 years. I never found a PE for a high-quality company to be at 22 times, let's say for Mag 7, to be a demanding multiple. Again, I think if you're talking about price for perfection, it really has to be stocks where you have to back into the NPV of 100% earnings growth forever. There's a lot of uncertainty going into January FOMC because last month it really caused markets to rethink the probability of a hike. But the probability of a hike for 2025 now stands at 27%. I think that's an extraordinarily high probability. I think there's a chance the Fed sounds more dovish than market expects.
Market analyst James Lavish warns against panic selling following DeepSeek's rise. He took to X to caution those selling Bitcoin. He stated, "If you are selling your Bitcoin because of the DeepSeek news, you have no idea what you own." His sentiment echoes Wood and Lee. AI and blockchain are driving long-term economic shifts, and investors who react to short-term volatility risk, missing out on transformative opportunities in finance and technology. Let's watch clips from Cathie Wood's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
Yes, I think competition is great for the U.S. and DeepSeek is competition, no doubt about it. I'm hearing all of the titans, tech titans, speak of it glowingly. I don't think we know everything about it yet. So, no, I think it's competition is good for the United States. Lowering costs is great for the world. The collapse in the cost of innovation should help all regions of the world. I will say that new productive forces, which was Xi Jinping's new phrase, I think 18 months ago, seems to be showing through right now. Common prosperity was the previous one, and I still think that's in effect. That was more about margins. This is about innovation. So we're looking more closely at China now. If you look at the second, third, and fourth quarter of last year, you look at the mega caps and the rest of the stocks in the S&P 500, you'll see mega caps in the second and the fourth did very well. And the smaller cap stocks did very well, much better than the mega caps in the third quarter. I think there's a little bit of a tug of war evolving here. And if we're right, the most massive concentration in the market in history, worse than the Depression, is probably going to give way to a broader-based bull market. We're seeing that in our portfolios, and it really did start right around, actually, the day after the election. And I think one of the most important things is going to happen is regulations coming down. Even in AI, in the United States, their regulations started to intrude in a technology that is today where the internet was in the early 90s. We don't even know what we have yet. Yeah. We're as excited as back then, but now is not the time to regulate it heavily.
Do you need to be sitting on billions or trillions of dollars in cash to excel in AI in the next 5 years?
Well, I think DeepSeek just taught us that the answer is less than people thought. You don't need as much cash as we once thought. I don't know if the number is right, 6 million to train that model. That's unbelievable. It's a tenth or less. Now, many people don't believe that. But again, it fits in with the costs collapsing thesis. They were collapsing anyway. DeepSeek has just stepped it up a notch. Yes, if you look back at the Depression, I'm not going to get all of these numbers right. What you'll see is the massive concentration took place until 1932. Yeah. At which point the market started broadening out. And small or mid-cap stocks back then way outperformed large-cap stocks. And it makes sense. They had been absolutely destroyed during the Depression, which was binary. Is this company going to survive or not? With output down 30%, GDP down 30%. It is surprising to me that we got to an even greater point of concentration than the Great Depression. It tells you that in an underlying sense, there was a lot of fear in the market and that investors were piling into cash-rich companies that, oh, by the way, had, a leg up perhaps in this new thing called AI. Now I think it's just going to broaden out. I think we will get significant clarity in terms of regulation. We will get legislation as well. I think many more policymakers in Washington understand that this was a single vote issue for many voters, especially young voters. And so this is becoming much more of a bipartisan issue. And of course, you have the executive branch also supporting it mightily, proposing that we include Bitcoin in Treasury reserve. So you've got, I think we're going to have support of all three branches of government are going to be supportive, which is a big change.
Cathie Wood sees DeepSeek's rise as a game changer, accelerating AI's cost collapse and making innovation more accessible. With AI training costs plummeting up to 90% annually, she believes this shift will fuel global economic growth. Beyond AI, Wood predicts a major market transformation, similar to post-Great Depression trends, where small and mid-cap stocks outperform after years of mega-cap dominance. She highlights Bitcoin's low correlation to traditional markets, making it a true digital monetary system. Meanwhile, DeepSeek's rapid AI breakthroughs, built in just 2 months for $6 million, are challenging U.S. tech dominance, proving that innovation costs are collapsing. Wood also notes the rise of stablecoins as an entry point to DeFi, while CBDC resistance grows in states like Florida. As Bitcoin gains institutional backing, she predicts its role as a financial safe haven will only strengthen. Let's watch more clips from the interview.
This is the layer of the internet that developers did not build in the early 90s because no one thought anyone would buy or use financial services on the internet. I remember back then no one was going to give their credit card to the internet, right? This is the next big wave, and it's a huge efficiency move for the financial services sector. So in terms of Bitcoin specifically, it is really the leader in a new asset class. And we have a paper out on that. You can see the low correlations, which do define a new asset class. And it is a global monetary system. It's a very big idea. If anything, what we're seeing with the stablecoin movement, which is how people, is the on-ramp into decentralized financial services. They're all backed by Treasury securities, which de facto, they're backed by the dollar. So we think that movement is gaining momentum here, especially now with the deregulation.
You say they're rules-based.
I said Bitcoin was rules-based.
Okay.
21 million units, and we're nearly at 20 million now. So that scarcity value will continue to support Bitcoin going forward. I live in Florida, and the governor of Florida, Governor DeSantis, has said he will never allow a central bank digital currency to be used in Florida. I think Texas has said the same thing. This is a states' rights issue, and it's all about privacy. Many people here in Europe don't think we care about privacy. On this one, on this score, we care about privacy. And this president very much supports that point of view. We went through another period like this. It was 2017. And Bitcoin that year went from less than $1,000 to $20,000. That was the ICO boom. And most of those failed. So it's buyer beware. Yeah. Be careful. And that is why we need some regulation here, because it's out of control, as I think you would say. Bitcoin's a completely different animal, though. Completely different. It's part of the tech movement. But if you look at Bitcoin, it has served as both a risk-on asset, so that's tech, yes, but also a risk-off asset. When we went through the regional bank crisis in the U.S. in the spring of 23, Bitcoin took off. Why? Because there's no counterparty risk in Bitcoin.
If big tech sells off, will crypto go down significantly?
The correlations are there is a correlation, but it is not as high as, small cap equities to large cap equities. The more institutions get involved, the more correlations will go up. But right now, if you look at the statistics, the correlations in terms of returns and risk among these assets, very different.
Cathie Wood sees this moment as part of a larger trend. AI and blockchain, she argues, aren't just technologies. They are the missing layer of the internet, driving efficiency, autonomy, and financial transformation. AI is crushing barriers, with training costs plummeting 75% annually and inference costs falling 90%, making powerful models like DeepSeek possible. Meanwhile, Bitcoin's rules-based, decentralized framework is emerging as a counterweight to economic uncertainty. Yet, Wood remains confident. These disruptions are not threats, they are opportunities. She believes industries that embrace this technological shift will thrive, while those that resist will fade. Meanwhile, Tom Lee is doubling down on AI-driven growth. Despite concerns over AI valuations, he argues NVIDIA's 30x PE ratio is justified given its dominance in a sector poised for exponential expansion. AI and blockchain, he says, are not competing forces, they are the twin engines of the next financial supercycle. We are standing at the edge of something historic. AI is rewriting the rules, and Bitcoin isn't just surviving, it's becoming a fundamental pillar of the new financial era. Wood sees it as a sign of AI's accelerating adoption. With stablecoins gaining traction and Bitcoin proving its resilience, she believes the next wave of financial innovation will come from the convergence of AI and blockchain, driving efficiencies, reducing costs, and decentralizing global markets in ways we have yet to fully grasp. As we wrap up, could Bitcoin surpass gold's $18 trillion market cap in the next decade? Why or why not? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to like and subscribe.